What's up, everyone? Welcome to the daily macro update for Wednesday, October 1st. First day of October, first day of the last quarter of 2025. Welcome to Q4, everyone. These are when the months go by really quick. Before you know it, we're going to have the holidays, Thanksgiving, Christmas, and New Year's, and then bam, it's going to be January 1st, 2026. So, hey, things are looking like they're still up despite this government shutdown, which is what we will be getting into today. Also, too, you did this morning have some buying opportunities, so hopefully you guys are taking advantage of those. I'll go over those specific things that I was looking at here. If you guys have any questions about the content that I'm going over here, or if you have any type of tickers that you want me to bring up after I go over some of the data here, just go ahead and leave those in the comments below. I appreciate everyone's engagement with those as it helps the algorithm, all that stuff, right? Okay, so day one of the government shutdown, and had a little bit of a sell-off this morning. But then towards the end of the day here, I mean, we're about to close in about 12 minutes, and markets had a pretty decent rebound. And so we'll get into that momentarily from looking at the charts. But taking a look at the big news today, this morning, we got the ADP jobs report, which only takes a look at private employers, right? So it's different from the BLS numbers because the BLS takes into consideration private as well as government jobs, right? And so, taking a look at this, ADP is a private institution, and so that's why it was able to publish their jobs reports, because it has nothing to do with this this government shutdown. And so, taking a look at this was pretty significant, right? So it showed 32,000 jobs being cut in September. I always find it hilarious how the chief economist over there, Dr. Nilla Richardson, she always tries to be very optimistic, even though you're getting these poor numbers. And so her quote was, "Despite the strong economic growth we saw in the second quarter, this month's release further validates that we've been seeing in the labor market that U.S. employers have been cautious with hiring." It's not just that they're hiring, Dr. Nilla Richardson, is that they're actually actively cutting jobs, right? And so, wait a second, I thought I had a chart of that here. One second, let me bring it up. Here we go. All right. So as you guys can see, this had a drop of 32,000 jobs. The last time it came anywhere close to this was back in March of 2023 at negative 53,000 jobs. But this was the first time since the pandemic that it had two back-to-back monthly negative job cuts numbers. And so that's pretty significant, right? That's a definite acceleration or deceleration in jobs numbers, according to the ADP. Now, of course, this is only one picture. Some say it's a lot more valid than the BLS numbers, and then some say the opposite. But in any case, it wouldn't be surprising that we continue to see jobs slowing from the BLS numbers. Now, they did say yesterday how if the government did shut down, that they wouldn't produce numbers. So it's unlikely that they're going to be, producing their numbers on Friday. Who knows how long this government shutdown will last? And so we're going to be covering all the markets through this government shutdown here, as well as any developments. The longest one was back at the end of 2018. I believe it was December 22nd, 2018, and that lasted all the way until January 25th of 2019. So that was the longest shutdown that they had before this. That was 32 days. I doubt it lasts that long. The typical average shutdown is about a week. So who knows? This could go all the way into the middle of next week. But that's a development that is happening currently. But what it seems like is that the markets don't really care, specifically with Google. Google was actually something that our team was buying this morning, as it came right down to the low of the trading range on lower volume, and it was red this morning. So when it came to Google, that was a very good buying opportunity. So hopefully you guys were taking advantage of that. There were some other ones as well. And, for those people who are in our macro optics community, you guys saw those there. And so if you guys would like to, check that out, we have our free trial going on. Just DM me the word macro and I'll send you a promo code for that. All right. Taking a look at some of the other macro data that we had today, we received the ISM Manufacturing Index, and so that had an interesting acceleration, still underneath that 50 level, so it still remains in contraction. Anything below 50 is considered in contraction when it comes to these ISM reports. And so, when zooming out all the way to 2016 here, you can pretty much see how, typically, historically, the ISM services or the ISM Manufacturing Index does remain in this contractionary territory during prolonged recessions, right? Really, the last time that it was underneath this 50 level for this long was all the way back during the dot-com bubble bust. And so, this is definitely interesting, although over the past couple years here, it has been steadily increasing, right? So the rate of change has been getting better over the past couple years, but it still remains in contraction there. So we'll see what happens from here. When taking a look at the most important components with prices paid, we actually had a third month of deceleration. Still remains relatively high compared to where it was just a couple years ago, but still a deceleration from these highs is good news in terms of price inflation that these manufacturers are experiencing, right? So input prices are continuing to come down, which is actually a good positive signal for inflation coming down. New orders still remains pretty suppressed. That really hasn't had too much of a rebound, and so demand is still low. And then employment had a little bit of a rebound here, but still remains well below contraction or expansionary territory. So, yeah, you're still seeing a pretty, decent deceleration in the employment sector for manufacturing. All right. Taking a look at the Fed Watch, right now there's a 99% chance after that ADP chart of a 25 basis point cut, and they're actually starting to almost price in a 50 basis point cut, but pretty much the market is guaranteeing a 100% chance of a 25 basis point cut at the end of the month here. That meeting is on October 29th, which we'll be going live for that meeting like we always do for the Fed meetings. And so what's interesting is that when taking a look at the charts here, specifically the signals that the bond market is showing with inflation, what I'm starting to see here is something that we haven't seen in a while, but that is that the 5-year break-even inflation rate is starting to, break through its floor here that it's been pretty much since July, right, which is around that 2.375 mark. Right, so this is the 5-year break-even inflation rate. And when this starts to decelerate, that would actually be a very accurate indicator of inflation slowing down. And so looking at rate of change data and all that stuff, we're starting to see that we could see throughout the later part of this year, right? So November and December, you could start to see inflation start to come down, tick down a little bit, right? Which again, if you see inflation starting to tick down while at the same time growth is rebounding, that would actually be the perfect, soft landing scenario that the market is looking for. And that's when you could really see some crazy numbers with stocks and other risk on assets like Bitcoin. So I would highly recommend that you guys take a look at this chart here. That's what the ticker looks like. You have to manually enter it in. I like to look at the calculation here because it updates daily. If you just type in the ticker for the 5-year break-even inflation rate, it'll give you one that I think updates like every 24 hours. So this is more, real time. That's what I like. It's a lot better to look at it that way. You get a much better response. But yeah, so it is definitely interesting, seeing that. It could be good news or bad news depending on what growth is going to do from here, because if growth continues to slow while at the same time you have slowing inflation as well as more strict monetary policy from either the government not spending as much, or you start to see a rate of change slow down in deficit spending, or at the same time you also see still quantitative tightening from the Fed, as well as them reluctant to continuing to cut as much as the government, as well as the bottom 50% of America wants, then you could start to see some fallout there. But at the timing of this video, it's still not necessarily a huge problem. Even when taking a look at volatility, the volatility index of the S&P 500 still remains well below in a range where, this is great for, continuing to buy dips. And so that's what we were doing with, a lot of the different things that we were looking at in our group. So yeah, a great time to buy some things. Among the biggest movers, natural gas right now, specifically the ticker UNG, that just had a breakout. And so natural gas is on the rise. You also have the steel ETF SLX having a large acceleration today. And then, of course, you had things like silver, copper miners, gold miners, gold itself, copper, all these base metals, industrial metals, precious metals are still continuing to do well. And yeah, that's been, as you guys have seen, and for those who regularly join these live streams every single day, we've been long gold for quite some time, as well as these precious metals. So by now, if you've been watching the channel, hopefully you guys have some exposure to those things, because that's been what's blowing out a lot of the indices, right? So with that also as well, Bitcoin having a decent rise, trying to get back to bullish trend, because it's closing right here at the top end of the trading range, or actually it's well above the top end of the trading range here. We'd probably put this, I'll have to see what my research partner says, but Bitcoin is looking like it's breaking back the bullish trend here, which is quite interesting. While at the same time, Ethereum still remains in bearish trend. So that's pretty interesting. Solana never broke its bullish trend. It's having a decent bounce. So, Solana looks good. Bitcoin miners, putting in, another close here at the top end of the trading range. So good time to sell some of that. Coinbase trying to break out of its consolidation period here. Taking a look at Coinbase, this stock typically does well when, Bitcoin does well. And so if Bitcoin is breaking out, there could be a high chance of Coinbase. So the ticker for this is COIN. We could start to see this retest, the previous all-time highs, which, that would be pretty significant. That would be a 20% move from here. So got to keep your eye on COIN. All right, so let's take a look at the SPY here. The market closes here in about a minute, and take a look at that, ladies and gentlemen. This is closing again right at the top end of the trading range. Had a really good buying opportunity at the beginning of yesterday as well as today. So you had two good buying opportunities. I was really wanting to wait and watch in terms of like the indexes. So for those who are subscribed to our free newsletter called the Daily Index Ranges, you guys noticed that this morning it was more of a wait and watch, since it was near the middle of the range. And so with it now popping up to the top end of the trading range, this was a perfect time to sell some, right? Now, it's not that we're giving financial advice, we're following our process. And the rule is that when things, pump or rise and they close near the top end of the trading range, that's when you want to take some profits, not sell the whole thing, right? Everything is very incremental. You want to just shave a little bit off the top so that you can then re-enter those positions down lower on another dip, so long as it maintains its bullish trend, which it's really been doing, pretty much since when we went bullish on it back in May, right? And so, just taking a look at this, right now I have our trading range model indicator with the clouds on the top and lower end, just to show you guys historically where the ranges have been. And so, taking a look at this, I'll just highlight here some of the places that was a great time to buy some. So like for example, it went bullish on this day right here, right? May 12th in our model. You really didn't get too much of a buying opportunity. You know, it got the closest right here, right? On May 27th, right? So that got pretty close to the low end of the trading range. Another one on June 24th. You had another opportunity here on July 17th. You had a pretty big opportunity. That was a clear buying opportunity right there on August 1st when you had that drop right down and it touched deep at the low end of the trading range. You also had another opportunity here to buy some. When was that? That was a 2-day move, but really the main one was on August 20th. You had another opportunity there on September 9th. Or I'm sorry, September 4th, September 2nd. And then you also had an opportunity there just recently on September 25th, right? So ever since our model went bullish on the S&P 500, you've had 1, 2, 3, 4, 5, 6, 7 opportunities to reload up on it after you've sold some, you know, from these different positions, right? So going back to, you know, this buy opportunity here on May 23rd, you know, as it gets closer to the top end of the range, you know, maybe you sell some right around here, right? And then you buy it back at the low end. And then maybe you're taking profits little by little as it keeps, you know, topping out at the top end of the trading range. And then you buy, and then you reload back over here, right? So what that does is, and this is kind of getting into a little bit more of kind of the strategy portion of what we do. But the reason why you shave a little bit off the top as it reaches the top end of the trading range is that it has a dual function. One is that, you know, if it does, for whatever reason, break trend, you're not fully loaded into that position. And so your losses aren't as much, right? While at the same time, if it does go down to the low end of the trading range, right? So you've captured some of those gains, but now when you enter it lower at the low end of the trading range on lower volume, lower volatility, and it maintains its bullish trend, now you are effectively compounding that initial position, right? Because you're reinvesting that at a lower lower high at the low end of the trading range, right? So risk managing and compounding at the same time, that's what you want to do, and you want to maintain patience as you do that, right? Because as you can see, it does take patience. Only having, you know, about 7 opportunities over the past whatever that is, you know, 4 months, that does take a lot of patience. And so part of what we do in our community is make sure that we are calling out those signals, as well as, you know, providing you with the tools so that you can do it yourself, right? But that's kind of like the technicalities of a lot of our process and how we like to use it. And, you know, these trading ranges adjust to any type of volatile asset, right? I'm trying to think of one recently that we were talking about. I mean, we can even look at Tesla here, right? Tesla, as you can see, was bearish in our model and went bullish on August 11th there. And then it didn't provide an opportunity until, you know, almost a couple weeks later on August 21st. And then again on September 2nd, right there. And then, you know, you could have gotten some type of opportunity here if you wanted to just buy on red, because it was bullish at that point. But really, something like Tesla, you really haven't had a good buying opportunity with this since September 2nd. And so, you know, it's one of those things where you just have to remain patient if you ended up missing that sort of thing. But what's great is that, you know, this gives you that confidence so that you can be patient and wait for those opportunities. Because, I mean, on your favorite ticker, if it's gone up a lot, that's typically when you guys actually leave a comment with a specific ticker after it's already gone up, and you guys ask me, "Hey, Johnny, what do you think of this thing?" And, you know, it just pumped, you know, maybe, you know, 10%, and it's now in bullish trend. Well, the only thing I could really say is like, okay, yeah, it's pumped up a lot, but I mean, you know, you kind of missed it. You never really want to chase something that's already green, right? And that's already pushing the top end of the trading range, right? So that's just to give you a little bit of a spiel of how we use our ranges. But you know, um, had one of my buddies, text me about Meta today, and it was a good question. But something like Meta does not look like some of these other types of Mag 7 stocks, right? So look at Apple in comparison, and then look at Meta. Obviously, two different charts. Meta is something that is still trying to hold in. It's actually, with it closing here, it just went from bullish to neutral. And so when something goes from bullish to neutral, it's no longer something that is on the top of your list, right? It's kind of like a wait and watch. And so, yeah, something like Meta, this is kind of not the best type of dip that you want to buy, only because it's lost, a lot of trend strength there, a lot of momentum. And what you would be rather looking for is something like Google that is in a much better trend, and it was providing an opportunity at the lower of the trading range, right? So those are just two examples there. One of the larger and surprising uh, developments is this very large 2-day acceleration in the healthcare sector. So look at XLV right here. Over the past 2 days, this has had a very large 561 basis point move. And so what's interesting is that, this is something where you don't typically see this in like a risk on environment, right? So healthcare is considered a defensive sector. And so when you see accelerations like this, a light bulb should go up on your mind and be like, this is kind of like a call to safety type of thing. It could be just from all the, fuss about the government shutdown, which in my view, in my team's view, it's kind of a nothing burger. Could have some type of effect with, growth perceptions, but still, that is definitely an interesting development with XLV. Definitely want to keep an eye on what a lot of the more defensive sectors do, because something like cyclicals that has been losing momentum. Growth pretty much still remains strong, right? Growth stocks, but yeah, you're starting to see a very large acceleration, mainly due to healthcare in a lot of the defensive sectors, right? Still, you have something like XLU, which is also a defensive sector that's in a clear bullish trend. I think the only thing that is in a bearish trend in terms of the defensive is consumer staples, which that definitely does not look like healthcare. But yeah, pretty interesting seeing healthcare do what it's doing right there. Taking a look at the dollar, it's still kind of maintaining, it's still in a bearish trend, but it hasn't really moved in the past 6 months, which is another interesting thing. Who knows, if we start to get more negative data, this could continue to drop out, but we'll see what happens from there. Excuse me. So that is pretty much what I am looking at. But we'll go ahead and take some questions here from the chat. Hope everyone is having a fantastic day so far. Oh, by the way, a little bit of an announcement. I do have to head out early tomorrow, and so we're going to have the daily macro update in the morning at 11 a.m. Eastern time. So normally, it's at this time around 3:45 p.m. But again, I do have to actually travel tomorrow, so we are going to be doing the show in the morning at 11 a.m. Eastern time. All right. So I'll also post it on the story too, so you guys see that. All right. First one is from Catherine. Hello. I would like to know, is gold still bullish? Yes, gold is still bullish trend. I can bring it up here, but just so that you know my thoughts, when something like gold does this, this is a pretty big macro signal that something's happening in the background. But really, any chance that you get where gold has a red day, just buy the heck out of that thing. Not financial advice. I'm just telling you what I'm doing. But yeah, I mean, the way that it's looking here, something's going on, right? Gold just doesn't just do this for no reason. And yeah, I think the next like 12 months are going to be pretty wild. So hope you own some. So happy natural gas, Matthew Wright says, is finally back on the rise. Why? Is it because you own a lot of it? Definitely the biggest winner today in terms of commodities. But what's interesting is that, the ETF that my team and I like to use, which is UNG, it doesn't really track the underlying commodity too well, but it is having a bullish breakout here. So I mean, even if even if natural gas, the ETF UNG, does go on another run like it's done in the past, let's say it goes up to even, a quarter way, right? That's a pretty decent 42% gain, right? So, especially with us entering into the winter months here, as things start to cool off and the demand for natural gas starts to kick up, um, there's a big seasonality with natural gas, right? Because if we look at this last time, natural gas had a big acceleration. Leave me a comment below when this happened. November through March. Exactly. So we might just be seeing a kick up right now on natural gas having its little seasonality move, right? So good call out there. But yeah, that's our team's preferred ETF. So UNG. With that being said, though, am I buying things right here? Well, again, when zooming in here, it did break up past the top end of the trading range for today, which is, a very bullish move whenever something does that. But am I buying it here? No, I'm probably going to wait for some type of red day in order to capitalize. That's just what I personally do. You can use your discretionary on that, but I personally just don't like to chase things that go up a lot. Because normally, when your emotions get involved, you chase green, then it goes down the next day, and you're like, "Dang, why did I chase? I could have got in on red." So, it is a good sign. It's definitely on my list now, though. All right, let's go ahead and take a look at Instagram here. I feel like the government shutdown was expected. Looking forward to your update. Yeah, I mean, it's pretty much priced in. The news can't get worse from here unless we go into like something really bad. But yeah, we are starting to see similar numbers in some EU countries. Isn't this indicative of a continuous slump and recession? Psycholion, Psycho Lion, Psycholion, Psycho Lion. What do you mean? Are you talking about like growth and inflation numbers? Are you talking about the European stocks? Like, what exactly do you mean when you see you're starting to see something similar? Maybe I was going on a rant beforehand, and you were talking to something that I was previously talking about, and I forgot. But if you could please remind me. Oracle breaking downtrend. Let me see here. No, I mean Oracle's in a bullish trend, so thing looks bullish. I was trying to wait to see if it was able to fill this gap right here, but maybe not. What about RTX? Yeah, RTX in a bullish trend. But this closed actually exactly at the top end of the trading range. Look at this. This is why I love this indicator that we made. Um, so this closed at 167.20, and the top end of the trading range zone was 167.19. So I love when that happens. But yeah, an RTX is another example of like, yeah, it's gone up. Yes, it's in a bullish trend, but it's not in an opportune time in order to buy, in my view, right? So so yeah, I mean, I'm going to remain patient on RTX for the loan of the trading range. As you can see, like going back historically here, um, the last time it was near the top end of the trading range after an acceleration was on August 29th. and that was when you did not want. That was a sell opportunity, right? And then you got a pretty decent, 2-day buy opportunity on, when was this here? On September 8th and September 9th. So yeah, if you had just added and not looked at anything else, added at the loan of the trading range zone on those 2 days, you're up 10% in 22 days. Not bad. Can't be mad at that. So yeah. They pay dividends. Cool. ILY, sure. Let's take a look. I don't see that. Oh, you were making an acronym. Haha. Yeah, I don't know. I don't know if I like the nickname that you're giving me there in the comments. Only my wife can call me that. But AMP. Yeah, so something like AMP, this is something that's in a bearish trend, so it's not even in the wheelhouse for me to buy this at all, right? So when something is in a bearish trend, even if it's at the low of the trading range, that's not really a buying opportunity. In fact, it's the opposite, right? So if something is in a bearish trend and is at the top end of the trading range on lower volume and decelerating or accelerating volatility, that's actually a shot to, or decelerating volatility, that's actually a shot to go short or buy puts or sell calls or whatever you want to express, your bearishness on that, right? So, if we bring this back up on AMP and zoom in here, you can see that, this thing was already bearish on this close right here. And so, you don't want to short at the low of the trading range. You got an opportunity to, go short like right around here. It did wick up to the top end of the trading range. And then, you had from here like almost a 6% drop, right? And then you had, if you covered at that time and then waited again for it to come back up to the top end of the trading range, it wicked right back up to the top end right there. And then you would have had another, 3-day opportunity. And now it's down nearly 4% from there, right? Oh, APH. Well, that was still a good example on using it to short. Yeah, this is something that's in a bullish trend. But it's not near the low of the trading range, so. Thoughts on RCL? Bearish. Appreciate the questions. Glad you're learning. I'm learning every day as well. I'm not up here trying to display myself as an expert. I'm just a guy who is lucky enough to do this full time, and yeah, I do my own research and publish it, and you guys kindly support the work that my team and I do, and it allows me to keep doing this. I had one person ask me like, "Hey, man, why do you even like sell research if you're making so much money and your model works so well? Why aren't you just sipping cocktails on the beach on an island somewhere?" And it's like, that's a fair point, but the thing is that you always still want to have income. Like this whole thing about people who have like this dream of day trading and you're on an island and then you close your laptop at 11 and you're done for the day. Like a lot of those people who made those videos like back in 2017, they weren't actually doing that, right? You always need a stream of income no matter what you're doing, okay? And so if I was to go ahead and make regular withdrawals from my trading account every single day, that would completely messed up. That would have completely messed up my compounding curve over time. And so between now and the time I retire, if I just keep eating away and withdrawing it every single week to pay for my lifestyle, well, then that could result in, hundreds of thousands or even millions of dollars of lost compounding by the time I retire. Why would I want to do that? I can still trade my time in order to do full-time research for people who want to do it, who don't want to do it themselves. Does that make sense? But it's a fair question though, because a lot of people go online here and they say, oh, they claim that they are actually, that their trading is actually what's funding their lifestyle. But I'll be totally upfront with you guys, and I don't use a lot of my unless I have to go and buy like a piece of property or something. But I don't like to use my trading account in order to live off of that. I might give myself a bonus at the end of the year or something like that. But I mean, I want to keep this stuff in the market and continuously compound it over time. It doesn't, you are removing compounding, right? Every time you make a withdrawal. You can still, you can still have cash in your brokerage account or whatever, but put it in something that's going to make 4% and at least have it outcompete inflation, if that makes sense. Right? So I thought it's a fair question, and it's something that I always thought with people who are online doing this. But I'm not trying to say that I'm any type of expert. I just have the opportunity to do this for you guys. So I enjoy it and I appreciate it. Can you look at European ETF inflows today? Sure, we can take a look at that. Let me see if there's any other questions here on TikTok. Meta's neutral trend from bullish, bearish, ready to change. Do you have a day job? No, this is my day job. So, we sell our research, and that's what is funding the lifestyle. So yeah, no, this is all I do full time. Yeah, so if we take a look, let's go ahead and go to Eurozone ETF. Let's see. EZU, yeah, I mean the ETF EZU, it does look like it's having some inflows. I mean, it's making new all-time highs right now. So let me go ahead and bring up my ETF ratio flow zones, and yeah, it's definitely in a period right now where there's inflows for sure. So yeah, it's accelerating. EZU. If you want European exposure and you're in the US, this is our preferred ETF here. Good call out. The two most positively correlated assets right now that are very close are emerging markets and the S&P 500. Is Snap on bullish trend 2? Snapchat? Terrible company, but I haven't looked at this, so we'll see. No, this thing's bearish as heck. Yeah. Good question, though. Good question. All right, we went a little bit longer than usual, but you guys had some good questions, and I had a couple rants. But I appreciate everyone for joining. Also, as well, our new website is up. Make sure you guys are checking that out. Right now, what we're doing is, if you guys want a free strategy session, right now we're doing these 45-minute strategy sessions where if you show up, we'll give you a 7-day free trial of our macro investing community, as well as we'll go over and we'll give you a PDF copy of our entire list of indicators, and we'll actually go over and show you on a 30-day plan how to use those. And yeah, we're offering those right now, so make sure you guys go on the website, reserve your spot, fill out an application, and we can go ahead and have a chat there. But yeah, let me know what you guys think of this new website. It's finally up after like a month of getting this developed here. And so, yeah, if you want to take a look at our programs and see like how they're actually laid out and know exactly what we do, like we have an entire kind of like comparison on everything that we do over here, right? I have a little bit of a market dashboard as well and some other things, but make sure you guys check it out and let me know what you think. But I appreciate everyone for joining. Have a great rest of your Wednesday, and we will catch you on tomorrow's daily macro update, which again is going to start at 11 a.m. Eastern time, not at 3:45. But appreciate everyone for joining. Have a great rest of your day. Bye.